Hi everybody, welcome to our nightly e-shot. We thought we'd do this one a little bit differently and record something rather than giving you something to read for the evening. Welcome to my home office, or prison as it's become for the last few weeks. Hopefully all of you are surviving in lockdown as well. What we want to cover tonight is the importance of understanding your real break-even point and also burn rates and what you're going to do if you've got a shortfall. So up until a few weeks ago, all of you had businesses that were fairly predictable, might have gone up a bit, down a bit. Maybe some of you were experiencing significant growth or other challenges. But from 1 month to the next, you had a fairly good idea how things were going to be. Things have changed dramatically, of course, and I know that some of you have put your businesses into hibernation and some of you are unaffected, but I think that most people are experiencing a significant reduction in volume of trade and are probably quite worried about the future. So what we're going to go through here is a little exercise that you should probably do to identify two key things. The first one is your real break-even point, and the second one is, if you're below that point, what we call your burn rate. Okay, so the next step is to look at your personal situation, and what you need to do is work out what your personal expenditure is going to be during this whole thing. Now, obviously, I'm a sad accountant, so I have a spreadsheet for all this stuff, and I think that a lot of my clients would be very disappointed in me if I didn't. If you don't have that, then I think this is a good time to start, really. Just going through your bank account and your credit card and just sort of seeing what all those regular payments are, working out a budget for all the stuff that you know is going to go out. Obviously, you're going to find that your costs are going to go down. There won't be any restaurant bills in there. There's not much being spent on travel costs, but there's still going to be some necessities in there. There's probably a few things that you can cut out that you're not going to need. We noticed that Sky and BT, for example, have put a pause button on their sports package, so you can just log on to the website if you have that and pause your costs, and they won't come back until the sport is back on again. But at the current time, I wouldn't be too drastic with all of this. Don't go cancelling absolutely every single direct debit you've got out. For goodness sake, don't cancel the life insurance policy and stuff like that. I think it's also worth thinking about that this is an opportunity for you to recharge your batteries a little bit and make sure that you're well and healthy, etc. So, make sure that you've got a decent budget for food and that you can eat healthily, etc. So now you know what your outgoings are. The next thing you've got to think about is what other household income you've got coming in. So some of you might have spouses who've got a different source of income that is coming into the family budget. Maybe there's some adult children that are contributing as well. I know that quite a few of my clients have got buy-to-let properties that are bringing some rental income in. Now, this can help because hopefully the rent that's coming in is more than the mortgage payment that's going out. But if you've got a tenant that's not able to pay you rent, then that might actually be a negative, because it might be that you've still got some of the outgoings, but you haven't actually got any rent coming in anymore. But you need to adjust your calculations for that. Once you've got that figure together, that is now the net profit that your business is going to make after tax in order to cover those costs. You now know how much profit you've got to make, and now we're going to try and work out your break-even point for sales. So knowing what the profit after tax needs to be, now you need to work out what the tax bill is going to be in order to leave you that much after tax. I don't know how many of you did or remember algebra at school, but this does require a little bit of a calculation on that side of things, because you're working backwards from profit after tax to profit before tax. If you're struggling with that, I'm pretty sure that your client manager will be able to help you out. So once we've worked out that tax bill, now we know what the net profit from our business before tax is going to be. And the next step then is to look at the costs in your business. Now you've got two types of costs here. You've got what we call your overheads, and we've got your costs of sale. So your overheads are fixed. They are the costs that are not going to vary as your turnover goes up and down. And your cost of sales, they're the costs which have a direct relationship with the sales. So if you're in the building industry, for example, you may well have a percentage that you know you're going to be spending on materials. So that will be a cost of sale. If you've got no sales that you're doing, you'll have no cost of sales either. Okay, right. Now, the next thing to do is look at those current overheads. And if your business has downsized quite a bit, then almost certainly your overheads will have come down as well. The furloughing scheme that I know a lot of you are familiar with may well have significantly reduced your wages cost for the office staff, perhaps, because for many of them you're going to get that money back from the government. You're also going to know that a lot of your phone bills and all sorts of other office costs are going to dramatically reduce. So just work out the stuff that is not going to reduce now that your business has downsized. I think for a lot of businesses, the biggest problem is going to be the rent if they have premises that they don't own. And we have experienced our clients telling us that they're getting a lot of pushback from their landlords and not a lot of assistance there. So the rent could be the biggest cost that's in your overheads that you can't do a lot about. We are going to cover that in a future newsletter, and we've got one or two lawyers that are giving us a bit of advice on that front. But anyway, once you've worked out what your overheads are going to be, you need to add that figure on to that net profit before tax. And once you've added those two figures together, that gives you your gross profit. So the gross profit is the difference between your sales and your cost of sales. And if you know historically what percentage your cost of sales are, then you can work out what your gross percentage is. So once you've worked out what your gross profit is in pound terms, you need to now divide it by your gross profit that you're going to make in percentage terms, and that will give you your break-even point. That will give you the level of sales that you need to make in order to make enough profit that will cover your tax and the drawings that you're going to need to live on. Now you're going to compare that to what your expected sales are. So this might not be easy for you, or it might be a relatively quick exercise. I know that there's lots of you that have got sort of regular monthly income coming in from your customers, and I know that a lot of you have found that income has been cancelled and contracts ceased, etc. So compare what your break-even point is to what you're expecting to make on your sales and see whether you've got a surplus or a shortfall. Okay, so now the last bit. You've worked out whether you've got a surplus or a shortfall, and if you've got a shortfall, then I think what you need to do is just go back and revisit that personal expenditure, and maybe you need to be a little bit harder and cut a few more things out. Maybe you need to look at where perhaps you could just generate another little income. That lazy teenager that never comes out of their room. Perhaps there's a part-time job at Morrison's stacking some shelves or something. Perhaps you need to go back to the overheads of the business as well, and maybe talk to one or two suppliers about how you can cut some costs there. But it's possible that you might not get to that break-even point, and whatever you do, you're going to have a shortfall. So the important thing to remember is that a shortfall in sales is probably not the same as a shortfall in your profit, because of those cost of sales that I was talking about earlier. So if you are about £3,000 a month short on your break-even point, then if your cost of sales are running at 60% of your sales, then you are going to be about £1,200, that's 40% short in terms of your profit. Now, ordinarily, that would be the figure that you would be expecting to need to subsidise until this whole thing's over. But what you might find is that your customers, who perhaps get a little bit of credit from you, are actually going to be a little bit slower in paying. So it could be that you've also got a bit more of a cash flow shortfall due to your debtor days increasing. And need to build that into the calculation in order to work out what your cash flow shortfall is. Now, the next thing to do is look at what reserves you've got. Maybe there's some money in a deposit account, some savings, or perhaps just an overdraft facility that you can use. And if you take that available cash and divide it by your shortfall, then that tells you how many months you've got before you're going to run out of cash based on normal issues. And we call that the burn rate. So number of months until you're going to run out of cash. And the next thing to do is then, just consider, are you going to be able to weather that particular storm, or is that, it could be a matter of weeks rather than months, and you're going to run out of money to pay your bills pretty soon. So the next thing to do is to look at how you can improve your cash flow by some of the government schemes that are out there. So the first thing to remember is that your next VAT bill is able to be deferred, and it's important that you've cancelled the direct debit that you've set up so that money is not automatically taken when the next VAT payment is due. The other thing is that other tax bills, there is the time to pay scheme where you can phone up the relevant number. It's all available on the government website, and you can find it through our coronavirus hub as well, and just ask them to defer some of the tax or spread out the payments. You might need to talk to some of your suppliers as well. Perhaps the landlord hasn't been particularly understanding about reducing the rent, but maybe there'll be a bit more understanding about deferring the rent. So there's a lot that you can do to stretch out that cash flow a bit, even though you're going to have to catch up with it at some point. But hopefully we might go through a little bit of a mini boom, because there'll be all this pent up demand when all this thing's over. If you're still not at the point where you're going to be able to pay all the bills, then the next thing to have a look at is the business interruption loan scheme. And again, there's quite a lot of information about that on the coronavirus hub. So that's it. Hopefully all of you are able to do that calculation, and you've got enough money to pay all those basic bills. It's a pretty tough time for everybody, but if we can keep food on the table, we can keep a roof over our head, then hopefully at the end of all this, we'll be able to get back to running successful companies again.